Hello friends, this is Raj Sastry from Raj Option Trading. Today is July 30th, 2022. Hope you're all doing well. In today's segment, we'll take a look at the market and look at what market is doing and then focus on most beaten down stocks. Look, we got one of my favorite company, Tractor Supply Store. Stock came down after all the retail stocks came down. So with that, let's jump in and get started. Look, from an agenda perspective, let's start with a market update, see what market is doing and look at the sector performance. We look at the sectors and look at their 1 day, 5 day, 10 day, 1 year, 2 year, 5 year performance and see what sectors can do well. And let's look at the top ETFs and also my favorite. Let's try to spot the trends with the ETF. And finally, let's talk about yield curve. Everybody is talking about yield curve and yield curve getting inverted. Let's take a look at that and go from there. Finally, let's look at most beaten down stocks and see which ones we can buy. So with that, let's jump in and get started. Look, we got a 1 day market on last Friday here. Look, we got Dow Jones Industrial Average did very well here, up 315 points, and we got Nasdaq jumping nicely here, and S&P also did very well. Look at that last hour candle here. Looks like we got slight weakness coming up in last one hour candle here, so we got to be slightly careful. Look, stock market is at its second straight week of gains here, helped by Amazon, Microsoft, Apple, Google, and so on and so forth. Even though earnings are not great, I think these companies are getting free pass by Wall Street here. They're doing great. And we got Alibaba dropping over 11% after being added to SEC's delisting watch list here. So we got to be careful. I like Alibaba. As it comes down further, I might scoop up some Alibaba. And finally, we have Federal Reserve's preferred measure of inflation. It got re-accelerated in June, which is personal consumption expenditures, PCE, rose to 6.8 and highest was 6.9 back in January 1982. So that's why we are not out of the woods yet. So we have to be careful. Even though market ran up last 2 weeks, this could be bear market rally. We got to be careful. And look, GDP fell 6.9% in the second quarter and second straight decline, which is a strong recession signal. So we got to be careful here with GDP falling in second quarter in a straight decline here in 2 consecutive quarters. We got to be careful here. This came from broad swath of factors, a decrease in inventories, residential and non-residential investment, government spending, and so on and so forth. There is a lot of these red flags here, but market seems to be going higher, so we got to be careful here. Some folks argue, some of these red flags like GDP, this could be a rear view mirror. It could be a lagging indicator. So that's why there is some bullishness in the market. All right, let's jump in here and look at fear and greed index. Look, from a fear and greed index perspective, we are at 42. Just a month ago, we were just around 12 or 13 here. So that's why you got to be careful here. Even though market is going higher, I can expect us to go back to extreme fear zone. As Fed is still aggressive, they might reduce the pace of change, but they will still increase the rates. That's why market can come down here. Take some profit off the table and keep some money. So as the market comes down, you can buy some great stocks. All right, let's jump in here and look at the market. Look, from a market perspective, we got S&P 500 future here, which is ES. Look, it's doing nicely here in the past, right from 2022. It's been doing lower lows, as you can see here. Now, finally, it's making some progress here. It's above its threshold here, resistance level. That's a good sign here. There is some hope. But it's going up too quickly. You got to be a little bit concerned and take some money off the table. If it comes down, you can buy some great stocks here. So it's all about sector rotation here. Some of these sectors will participate in the rally. Some sectors will get left behind. For example, you got sectors like gold, copper, and some of these sectors are down big time. That's where you can buy slowly and accumulate. And look, we got Dow Jones Industrial Average, same story here. After getting beaten down right from 2022 here, now it's making a progress. It's breaking through the resistance level. That's a good story. And same story in Nasdaq, a little bit more weaker, but it's also doing very well, breaking through the resistance level, as you can see here. Russell also same story here, doing great, breaking through the resistance. And we got bonds going higher, interest rates going lower. That's a good sign here. And crude oil is kind of taking a back seat here, as you can see here, which is a good sign. You can still buy some great companies here. And we got some great earnings from ExxonMobil as well as Chevron. And look, gold is getting clobbered here. It's trying to make its way higher. We can buy some great gold stocks. We'll talk about some. And look, we got dollar. Dollar is getting strengthened. This is a concern. You must have heard about the strong dollar in multiple earnings reports. That's going to cause some trouble for especially multinational companies. All right, let's jump in here and look at the market and look at the market breadth. I love to look at market breadth indicator. It gives me a good idea where the market is headed. Look, we got S&P 500. It's a 30-day chart, as you can see here. Nice uptick in S&P 500. Look, skew after jumping hard here is showing some small pullback here. Not a big deal. I'm not worried. Market should go higher. Look, skew is still very low here. If the skew hits about 150 level, I'm worried. But right now, it's not a concern. Market can still go higher. And we've got trend here, traders index, as many of you know here. Look, that tells you, generally advancing stocks are doing better, more advancing stocks than declining stocks. And it's showing some slight downtick here, but not a big concern. Tick, same story here. Tick is going higher. That tells you market can go higher. Tick is more of a, it's on a daily basis. You can watch here. You can look at the trend for the tick here. It's trying to go higher, which is a good one. And finally, we got advanced versus decline volume here. Look, that's trending higher. That tells you there are more buying pressure than selling pressure here. So this is a S&P 500 volume. I think there is stocks with more up volume, which is a good story here. And finally, we got VIX. VIX is slowly coming down. That also tells you this market, this bull market has got some legs here. And then you got put call ratio here. Look, after jumping higher, now it's coming down here. For the folks who want to sell some put options, it's not a good story. Premium is not great here for selling put option. But as the market goes higher, you can look at some volatile stocks and still make some money. And finally, we got Aud Jpy here, which is trending down. That tells you even though market is rallying here, folks are taking the risk off the table. That's why look, Aud Jpy is coming down here. That tells you, hey, don't this market, you got to be careful here. This market may not keep going higher, especially because Aud Jpy combination is going lower. That tells you market also can come lower. And US dollar, as you can see here, it's slightly trending down, which is a good story for stocks. All right, now let's jump in here and look at the sector performance. I love to look at charts like this to really see what sectors are doing well. So what I've done is really we have all the sectors here, and we got 1-day performance, and we got 5-day, 10-day, and so on and so forth. We got all the way up to 5-year performance. That helps me to understand how the sectors are doing. Look, as of now, in a year-to-date performance perspective, we got here communication services here down big time, as you can see here. And on a year-to-date basis, technology is also down big time. And we got financial services, and real estate is also down, as you can see here. But on a near-term basis, look what's going on here. We got consumer defense getting clobbered in a 1-day chart here, and healthcare getting clobbered, as you can see here. But look, we got technology doing great, energy doing excellent, consumer cyclical doing great here. So we got some good things going on here in many sectors across the board, with the exception of both energy and healthcare. Look, when healthcare goes higher, that tells you folks are putting money into the defensive side of the house. But now healthcare is taking a backseat here. You could buy some great healthcare companies, and they can go higher as the market goes down. And then you got here all the way to 5-year 1-month performance here. Look, consumer cyclical doing very well on a monthly basis. Helped by Amazon.com, and you got industrial doing great in a 1-month basis. Technology doing fabulous. Look, one of the highest in last 1 month here with the consumer cyclical here. And you got utilities also doing pretty okay here. But as you look at the 3-month performance here, basic materials getting clobbered here. Look at gold, copper, all down big time, even silver. And communication services, think about Snap, Facebook, so on and so forth, or Meta. They're all coming down big time here. And consumer defensive, when the market rallies, consumer defensives come down here. Think about Procter & Gamble and Clorox and so on and so forth. They're all down big time here. Energy doing great, and you got real estate not doing great. Financial services also not doing great. On a year-to-date basis, only energy is up here, and utilities are also up here, but others are down big time here. Communication services leading the way here with Meta, Snap, and so on and so forth. On a yearly basis here, communication services again getting clobbered here, and you got consumer cyclical also getting clobbered, and technology also down on a yearly basis. But look, on a long-term basis, even though energy is rallying pretty well in year-to-date basis and 1-year basis, look, energy has just done 46% in the last 5 years, whereas technology has done 164%. So technology can easily outshine other sectors in a long run. That's one of the reasons I like to look at stocks that are beaten down, sectors that are beaten down, which are ripe to go higher. All right, now let's jump in here and look at top ETFs and see what they're doing. From a top ETF perspective, look, we got SPY here, which is S&P 500. I love this ETF. It's a great ETF. Look what's going on. Nice, healthy volume here. 82 million shares traded, and look, it's been going higher in in a 1 month, 1 day, 5 day. Look, it's going higher, trending higher nicely, as you can see here. At this time here, RSI 66, that tells you it's slightly overbought, not too much. IV percentile for the folks who want to sell options or buy options, it's coming down, as you can see here. You could buy some put option at the top if you like, because IV percentile is slightly down, or you could even sell some put options way below and make some money. And you got QQQ here. Look, it's also rallying. Look at 1 day, 5 day, 10 day performance here. Most of these broad ETFs are doing very well in the short term here. As you see here, gold is not doing great. Gold is down for the month here, so that's why there are some great opportunities in the gold area. You could buy some great gold stocks here. And if you look at the 3-month here, consumer cyclical not doing great here. And look, we got TLT bonds are also getting clobbered, as you can see here. And as you can see here, we got semiconductors down in a 3-month basis. And look, real estate is getting clobbered here. You could buy some great real estate stocks here. And home builders are getting clobbered with the interest rates going higher. All right, so now you get the idea of what sectors are doing well. You can also keep a look at RSI here. When the RSI is high, you don't look at investing in those sectors, but look at investing in the sectors where RSI is slightly lower. As an example, gold. It's a great investment at this time. RSI is 52. It's slightly going higher, as you can see here. Communication services, you could buy beaten down names like Snap, Meta. You can make some good money. Even Pinterest, you could make some money in the long run here. And look, UUP dollar is getting clobbered, which is a good news here. It went up so much, it's coming down. That's a good story here. And as you see here, we got one more sector here, XRT, retail sector, completely beaten down. You could buy some great names like Walmart, Tractor Supply Store, and so on and so forth, even Target for that matter. All right, now let's jump in here and look at spotting the trends with the ETF. Look, we got some top trends here. We got clean energy, semiconductors, solar, and human genomics, and so on and so forth. These are some top trends here, including cyber security, lithium, and so on and so forth. Look what's going on here. Keep a watch on RSI here. If the RSI is super high, like clean energy here, that tells you right now, be a little bit careful. Don't need to jump in here. But areas like human genomic here, ARC-G as an example, this tells you this area, human genomics, you could still make some money, especially healthcare and human genomics. RSI is low. You could buy some great names there. And you got fintech here. Fintech also got clobbered here. Look, ARKF here, down big time here. RSI is 54. You could make some good money buying some beaten down fintech names here. And we got cannabis here. Cannabis is completely sold off here. They're waiting for regulations to be passed. You could buy some great cannabis names here. Look, it's trying to go higher in 1 day, and it's also trying to go higher 10 day. You see idea, you want to beaten down big time. It's trying to trend higher, so you could buy some great cannabis names at these levels here. And then you got cyber security. This also got clobbered here. RSI is 52. You could buy some great cyber security names and go from there. And we got cloud computing. Look, cloud computing also came down here. RSI is 53. You could buy some great cloud computing names here and go from there. Finally, we got here social media. Think about Snap, Meta. You could buy those names. They're also beaten down big time. All right, now let's jump in here and look at yield curve. Look, everybody's talking about yield curve. You got to be paying attention to yield curve, so that will tell you what's going on here. Look, from a yield perspective, you got a 1 month yield at 2.184, and you got 1 year yield which is 2.9. Look, 1 year yield is high, whereas look at 10-year yield, it's 2.6%. The difference between the 10-year yield and 2-year yield is 0.321. It's negative. Normally, a 10-year yield is higher than 2-year, but right now we are inverted. Where normally 10-year yield is higher than 1-year yield. Right now it's the other way around. It's inverted. Look, a 10-year yield is much higher than 1-year yield. The difference is 0.321. Same story on the 2-year yield. Look, normally 2-year yield is lower compared to 10-year, but now it's inverted. So 2-year yield is higher by 2.33% compared to 10-year yield. That's why it's called inverted yield curve. So we got here 10-year, 1 year here. Look, as you look through here, we got inverted yield curve, meaning 10-year is more than 1 year. A couple of times here, look, we got inverted yield curve back in 1980, and we got a couple of inverted yield curve as you can see here, and we got one more inverted yield curve right now, where 1 year is 1 year is more yield compared to 10-year. That's why right now it's inverted. So when there is an inverted yield curve, look, last 7 recessions we had an inverted yield curve. That's why folks are a little bit careful about inverted yield curve, and we should also be careful and go after some great names here and go from there. All right, now let's look at yield curve again. This time we are comparing 10-year versus 2-year. Look, right now 10-year is more than 2-year, and look, we got here 2.33% here. That tells you 10-year is less yield compared to 2-year, and 2-year is much higher. And look, we had a couple of places where we have inverted yield curve, including the one right now. That's one of the reasons we got to worry slightly and go after some great companies. Look, we still have issues with the war going on here, and we got supply chain issues. We got Fed at least still raising the rates, even though pace of increase of rate hike could be slowing down, but they will still increase the rates. That's why you got to be careful here. That's why you should pay attention to the yield curve and be slightly careful when the yield curve is inverted, and go after some great stocks with the nice fundamentals. All right, now let's jump in here and look at the sector performance on a yearly basis. Look, we got energy here. Energy is doing well here. So far, year to date, energy has done 34%, and back in 2021, it's done 43%. Energy can't keep on going higher. The moment it goes higher continuously, it'll drop off here. Look, we got back in 2010 and 2009, it went higher. Finally, next 2 years, it came down here. That's why you got to be careful here. Energy has been going higher, but that could be, there will be sector rotation opportunities if the energy keep going higher. And then you got industrials here. Look, so far industrials are down for the year. There are some good opportunities in industrials. And look, some sectors here down big time here. Look, basic materials down big time. Look, it's down 10%. Real estate down 14%. And look, technology is down 26%. Healthcare is also down here. I would be looking at sectors which are down big time and look for investing opportunity there. Go after some fundamentally great companies. And look, some sectors like healthcare as an example. Look, keep watching back in 2018 here when all the sectors are down. Back in 2018 when the Fed increased the rates, healthcare did very well, and also utilities did very well. That's why these are the defensive sectors. They tend to do well when there is a high inflation. That's why, given healthcare is beaten down, and also utilities also slightly beaten down, you could invest in those names here in addition to technology. And then you got here, in the basic material sector here, look, we got some areas which are beaten down big time. Look at the year to date here. Aluminum getting clobbered here. Year to date, big time down. Building materials, big time down, as you can see here. Copper is getting clobbered here. And you got gold getting clobbered, down 19%. You get a good idea. Look at the silver here. Silver is getting clobbered here, down 22%. And specialty chemicals also down. So you should look at those areas and look at some great names here and buy. Normally, investors make money when they buy some great stocks which are down. The mantra is to buy low and sell high. You should really go after some great companies. All right, let's now jump in and look at copper. Look, copper is down big time here. It's one of the great metal. It's used in multiple applications here. Look, we got Freeport McMoran here, FCX, and look, it's down. Say 13% in 1 year, and it's down 39% from 52-week high here. Right now, RSI is 57. And look, it's been down in it's been down in 3 months and 1 year. Now it's trying to go higher, as you can see here. I say wait slightly here with the RSI 57 here. I would wait slightly here and then start buying Freeport. And then you got a few more here. SCCO, one of my favorite here. Looks like insiders are selling SCCO here. Stock is, as you can see, a stock is trying to go higher slowly here. You could buy this one given RSI is below 50 here. This could be a good one here. And also we got TRQ here. You could buy this one also. RSI is low, as you can see here. And TRQ has made some good money for investors in last 1 year. Also keep watching the net margin here. Freeport McMoran, nice positive net margin. TRQ and Southern also nice net margin here. Those are the money makers. You could buy them and take advantage of this whole copper crash. All right, now let's look at gold here. Gold also crashed, as many of you know here. Look, we got gold here. Keep watching the net margin as usual. I love the companies with nice and high net margin. Also keep watching the longer term performance. Look at 1 year, 5 year performance. You want to look at the companies which have done well in the past. So one company here, we got FNV here. You could buy this great company here. Look, it's down big time, but it's done great in last 5 years. Look, the volume is down slightly in the last 10 days. So that's a little bit concern for me, but generally volume is higher than 30-day average volume and 90-day average volume. That's not a big deal here. So you could buy FNV here. given company has got a nice net margin here and generally does very well. And we got AEM here, which is one of my favorites here. You could buy AEM. Look, volume is surging. Current volume is more than 10-day average volume, 30-day average volume, and so on and so forth. You could buy AEM at these levels here, and this one has not made much money for investors, as you can see here. It's lost money in last 5 years, also 1% down, but look, it's got nice overall 36 overall score, not too bad. And as you scan through here, got a few more here. Look, we got one with nice and high score here, Sbsw. It's a good one here. You could buy Sbsw. Nice 5-year performance. Stock is got clobbered, as you can see here, but it's trying to improve right now. And look at the volume. There is a nice and high volume surge here. You could buy some Sbsw at these levels. And also look, we got RGLD, same story, nice volume surge, and it's got nice net margin, 43%. You could buy this one also, but the problem with this one is, look, it's got a little bit low performance in last 5 years. Company has not made much money for investors. You could look at other companies here. We got AU and AUY. AUY could be a good one here. Look, it's done good money for investors. Nice overall score, 45 here. You could buy some. Look, volume is coming slightly down, as you can see here, compared to its average volume. And we got SSRM here. This got clobbered, as many of you know, but look, volume is increasing here. Stock is also going higher. You could buy some SSRM here. This can also do well. And we got one more here with nice and high overall score here, EQX. You could buy this one also here, but only problem is, look, volume is coming down big time here, and it's not made money for investors, so I would not go there now. All right, now let's jump in here and look at most beaten down stocks. Look, we got few names here. I made sure all these companies are making money. Look, net margin is positive for all these companies. Don't need to worry too much. And it's sorted by market capitalization. And all these stocks are beaten down. Look at the RSI here. RSI is less than 50. That tells you all these stocks are beaten down big time here. And look, most of these stocks have got volume in their favor. The current volume is more than 5-day, 10-day, 10-day, 30-day, 60-day, 90-day average volume. Maybe with the exception of Merck. Look, Merck got beaten down here. You could slowly start buying some Merck, but it's right now volume is stabilizing, as you can see here. But it's a good one to buy given RSI is low here. And you got a few more here. I love stocks like J&J, healthcare sector, Pfizer, again healthcare, ABBV, Merck. Many of these healthcare names have come down here, including Vertex. You can buy those great companies and go from there. And look, we got Garmin here. Garmin came down big time. You could buy some Garmin here. Look, volume is higher compared to their average volumes in 10-day, 30-day, 60-day, 90-day. You could buy some Garmin given it's a big time down here. And I've got a few more here. Keep watching the overall score and keep watching 1-year, 5-year performance here. We got a few names with great 1-year, 5-year performance here, including Horizon here. Look, Horizon Therapeutics, nice performance here. Look, its volume is slightly down here, but you could start buying this great company here. And we got one more here, Trade Desk, with all the digital advertising and how it's coming down big time here. Look, this stock has come down big time here. I'm slowly starting to accumulate TTD here. It's a great one. It'll do very well in the long run. And look, we got one more here, ServiceNow. Look, it's a nice performance in the long run here, and stock is trying to go higher in the short run slowly here. You could buy ServiceNow at these levels. You would do very well. All right, so we got a few great names here. Take a look at these and keep an eye on 5-year performance. You want to look at the ones with the nice and high 5-year performance and also nice and high overall score. All these companies have got overall score more than 50. That tells you these are good companies. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.